Hey, good morning, Randy. All right, I don't know if you were paying attention to what I had written there in the group, but we had a PPI report this morning. No, I think that one was, effectively in line because it was like up on one metric, down on the other, and both negligible. But it was the jobless claims, I think, possibly that raises some concerns. I think that prices need to reflect those concerns, but the concerns are only that prices need to reflect those concerns. In other words, there's not concern that we're about to plunge into a recession, but the jobless claims went up by 10% than expected. There were 10%. Sorry, I don't know. Did they even go up? That's another metric to double check. But let's see. Jobless claims are 242. Previously, they were 224. Okay, they were previously 224. They were 242. 224. That's a 8% increase in jobless claims. But I'll show you the chart in just a second here. We'll take a look at it together. 8% increase, but it was also we were expecting there to be for it to be slightly less than the prior numbers, 220,000 versus 224,000. So we were expecting it to be slightly less. Instead, it came in at 242,000. So there was 22,000 extra jobless claims that were not expected, I guess you would say. And that's 10% more than where they thought, the analysts thought we would be. And so that looks like, let's pull up the chart on that. So that looks like a spike. And there hasn't really been a downtrend this year in jobless claims. I mean, let's see if I can mark this up a little. Let's see. Grab green, red, purple. Red should stand out. I mean, you have this lower low here. You have this series of lower lows, and that's great. I mean, you do want to see that. That appears to be a trend, but you had this trend going on prior to that, which was an uptrend. And when it did this megaphone pattern essentially is what's going on there. You have increasing volatility in the jobless claims economic corner of the market. What were you saying? Oh, I'm going to read what you said in just a second ago. I'll have to take a look at what you said there. Something about G-Wave. It's covering it up for some reason. Yeah, I'll check in a second. So anyway, now we move up with this number. Oops. We move up with this new number. So it's going to be just like sort of very interesting. We need like 2 more readings. Are we going to go up and then pull back down? So that would, continue this megaphone pattern. Or are we going to go down from here, down here? And if we did do that, if we went lower than this right here, after having hit this level here, then that's the first time. So the next two readings are just sort of quite critical in figuring out where things are going, because that will be the first time we get 4 points to a downtrend in the jobless claims economic figures, in a long while. And it just hasn't happened yet. we're sidewaysing, but we're increasing volatility. So there's that possibility for the next two numbers. They could come like that, and that would be wonderful. That would just change everything, and that might happen just prior to Trump taking office on the next numbers that when they come. They might help us see that. Well, actually, I think these are weekly. Yeah, these are weekly changes. So we will actually have, in the next 2 weeks, those numbers, regardless. We'll have 4 readings before Trump takes office. So we'll have 4 readings. Now, the other way it could go is we could have this bar, and I'm going to make this sort of, well, I don't have blue. All right. But we could have a bar that, increases on the next one towards the top of the megaphone. And this is like flipping coins, and you don't want to get 2 bad coin flips in a row kind of thing. But then the next week, we get something that does this. That would break out. That would be just bad. So we're sort of far from... We're 2 complete weeks. We're 14 full days away from really understanding these jobless claims numbers that are coming in and knowing what the trend is. Because the trend will tell us whether we need to be concerned. If it were to break out, that would be the worst case scenario. Or do we go up and then we come back down? So we just continue with the same, which is just increasing volatility as the megaphone pattern continue. Or next week, do we get a lower number and then continuation and breakdown to the bottom, to the downside? So you see, the final word on this continues to come in 2 weeks, not next week. We need 2 more data points before we can say, A, should we be worried? B, should we be seriously worried? C, are things okay? Or D, are things looking outstanding? So it's very interesting because without the next 2 weeks of data, we can't know any of those. We can't say anything definitively. Well, what we can say definitively now, it's based on what we have now, is the megaphone pattern, which is increasing volatility. But that could easily show up in the next 2 data points that was over on this high here and that it's been fine since October. We wouldn't know that, though, until we get the next 2 numbers. That's why, pivot point reading and trend reading using pivot points and understanding trend reversals and going sideways and increasing volatility like VCP type, looking at and analyzing things. That's why that's just, A, so important, and B, takes so many data points, so much time, so many days or weeks, depending on what you're trading or looking at, or even quarters, what you're looking at, to be able to say something. You just sort of have to let it flow. That's why the Fed, you would say, is slow to react, because they're dealing with the same situation, which is they need to see 10 months to get an idea of things, right? So anyway, interesting analysis there, hopefully for you, on the jobless claims. And I think that may be what's causing the market to be a little concerned. The drop, I think, was because of the jobless claims, because PPI was sort of a neither here nor there. Although I saw some people posting that it was too hot, the PPI number. I just disagree. My opinion is that it wasn't. So, you add up everybody's opinion, I guess, and figure out where we're at. But that's, I think, probably they can say it's hot and I can say it's not, because it was neither here nor there. So it goes back to originally what I said, that I think the opinions will be quite mixed. And that's just going to cause a sideways outlook and great chop in neither here nor there. But it's the jobless claims, I believe, that did this move here. this morning at 8:30, which was 1, 2, 3, 4, 5, 6 straight, almost, there was just one spare minute, but 6 straight minutes of drop. So, but however, that has shown signs of bottoming, but it hasn't actually finished that until we could get above that level right there. Then that would give us a sideways signal on this low here. Right now, we're still in a downtrend. See, these points haven't connected. We have to get above this level in order for this line to get drawn like that. If we don't, then we could come back down here, and then that would make this line extend down to here until finally it gets down to the bottom. It's extending, and then it breaks down, and now we have 4-point downtrend. So we got to wait a few minutes here and see if we can get above this level to constitute a bottom reversal on this bottom push move. Just on this jobless claims numbers. This is, we're just talking about minutes here. And kind of like, what's the outlook? Is this a bottomless trap door that opened up? Or was it a pothole? We're going to find out. Actually, it could be in just seconds here while I'm talking, because I'm seeing it's coming. It's getting really close to breaking above that level. Let's zoom it up and watch. So we're trying to see if we could get above this high. It's only 2 cents away on the Qs. But that's the Qs. I mean, you got to look at the same. You got to look at it on the other market indexes as well, because they sort of all need to agree, because they all have different components creating that. Actually, over on the S&P 500, it already has 4-point uptrended off the bottom. So on the S&P 500, it already is doing. It has bottomed. So we got a bottom sign from the S&P 500. However, S&P 500 has also industrials and value stocks mixed in. And so that's fine. You could see S&P 500 moving up because everyone's buying Campbell's soup now and toilet paper to prepare for the apocalypse. It would move up because S&P 500 also comprises of value stocks, defensives, and industrials, which typically go up in bad times. And so, but the growth market, QQQ, is where we're going to really get a signal from. Okay, there it is. So it finally came through. The Qs just did break that pivot point. Will it close that way? Will it follow through? It would be nice if it extended, just to sort of cement the 4-point uptrend in growth. Now that 4-point uptrend only means that we've found a bottom on this down move. It could still, in the greater scheme of things, move down and break that bottom again and have 4 points to a downtrend. So we'll see. But this puts us into a nice maybe 15-minute window here of wait and see, which does make the supportive bottom, as it appears, a little bit stronger versus softer. So I'm just saying that PPI and jobless claims today definitely didn't release the market upward, but it also didn't open an infinite trap door of death. So I think, it's kind of neither here nor there, a little bit sideways. I expect prices to correct some, prices to adjust some, because of the jobless claims concern. It has to. It's just like it's an adjustment. It's like the dials and the knobs have to go tick, 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 and then, that causes them to lighten up in these stocks and put a little bit more on these stocks, and maybe even move to cash over here and grab a little more gold, whatever, so allotments and adjustments are made, but it's a minor adjustment, but you'll see it here and there. Some things will move this way, some things will move that way. The rotation and adjustments will occur, and then it will all get filled in over the course of many days whether or not it's soft or hard, each of those adjustments on each of those stocks, and that will be reflected, overall in the general market. And that's the complexity of the engine. That's just the way it is. So, but the overall consensus is that the economy is in good shape. Inflation is coming down next week. The Fed will drop rates more officially, versus that we already know they are going to. So that adds a little bit of final, remove some uncertainty. And we're in a bull market, and we're going into a 4-year business growth cycle with the capitalists moving into the top of the administration of the world's greatest economy. So par on par GDP wise. So, this is just normal. Plus, like I mentioned in my morning report, the market needs to wave. It has to undulate. It needs to wave. Sometimes, we have rally on rally, and we don't get 50% retraces on the pullbacks, or even cutting into prior highs like you see here. Maybe you don't know what I mean. Like here, we're cutting into prior highs. See? Here, we cut into prior highs. I call that folding. I'm sure there's probably other ways to call it, but, this has not been rally on rally like over here, where you see rally, slight pause, rally, slight pause. The pullbacks are nowhere near cutting into prior highs. Rally, so now that's a full rally. You can put it almost all together, really, because it didn't create any pivot low pullbacks. And then it has its first pullback. Then it's rally, 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 and then minor pullback. It doesn't fold. See? And then rally, 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 rally. And in that moment, it didn't fold. So that was a full-on, very strong, extended rally, not normal. And that's what caused this big, long 5-month base pullback, essentially, from July through November. But it's normal for the market to undulate and fold and do folding action. That was abnormal. There was only one time this year and one time last year where price did that, and it was both happened coincidentally be going into July, where we had extended rallies with no folding, with no fold back. Maybe I can call that fold back. It's a little bit easier to say. So you had that here and there. These ones had fold back. It touched prior highs and it did all that. So that's normal. It's normal. It's rare for us to extend and extend and extend and extend. And as much as you're going to hear people say, we're extended right now, we're only extended from the prior pivot low. But we did that also back here, and it's just the market's been folding, see? Below prior highs. I can do it in reverse like that, but you should do it the other way so you don't get too confused. Even this one it folded as well. And then both of those were folds. So, and this was all inside of a base. So it's perfectly normal for us to do some folding here, to do that. So maybe today will be a red sell-off day. Friday too. And then we gap open down Monday, push down for one final red day, and then Tuesday, find some bottom, and now we're right here. And then Wednesday, we doji before Thursday's Fed report, which hopefully comes with positive words about the economy. And then we're moving again. Santa Claus rally. Santa Claus rally should start on the 20th seasonally. The Santa Claus rally seasonally starts on the 20th and goes till January 6th. So we need some pullback in preparation for the Santa Claus rally. All right, so that was 16 minutes covering where we are in the market, and I think a lot of you needed to hear that. So yeah, I'm sorry it was so lengthy, but I'm talking about 2 years of market here, and then 2 rallies and 2 bases. I mean, in 2 years. So we're covering some pretty big, important points. This isn't just like we're spending 16 minutes on one candlestick. No. So hopefully that was helpful to you. All right, let me take a look at what you were saying, Randy. It's kind of hard to see this. I don't know why it does this, but let me move this up here. Okay. Finally, I think I have my first attempt at an amass with G-Wave from a couple days back. But I'm confused. Yeah. But I'm a bit confused as to the level of concern. I would normally expect decreasing numbers because of season. Oh, you're talking about something else there. Okay. But so G-Wave, we should take a look at it. While I'm pulling it up, tell me, when did you get in and at what price? All right, G-Wave. By the way, I forgot to charge my headset, so if I go dead, I'll like wave at the camera like this. Bye-bye. All right. Okay, so let me know. And you know that too, Randy, it could be completely seasonal for there to be an increase of jobless numbers. You know, maybe there's people that have been waiting to quit, you know, around this time of year, or they're less needed, or there's more cutbacks because, you know, everything's sort of been done in certain departments, you know, of company. Yeah, so totally. When did you get into this, Randy? There's many days here. And at what price? So G-Wave here, just FYI, is more of a penny stocking swing. And you can approach that with an amass strategy. But the strategy is more built for stocks that we know are going to trend and trend and trend and trend and continue, and they're in uptrends. But we have no uptrend here on G-Wave. It's a highly penny stockish. It looks like it's got a huge reverse split. It's quite a shitty stock. And it had a huge spike volume catalyst that was really not that rare dollar-wise. The last time was in May. So it wasn't like once in a blue moon type of catalyst. So it's obviously something's there, and it continued for 2 more days, and maybe it's Holy Grail because of the levels and stuff. But this is not necessarily something that you should have your scope targeted on. Okay, this is a penny stocking catalyst type of swing, and I'm pretty sure based on how it's gone from something to next to nothing with reverse splitting, and it looks like irregular reporting periods, that this is quite a shitty company, not one of the best penny stocks. It's quite a shitty company, and that they probably are diluting a lot, along the way. Let's go take a look. G-Wave. Oh yeah, they just recently had a 253% dilution. And then prior to that, they had a 4,000% dilution. That's a 40x dilution. So if you had $100, you'd have $2 left. So this company is a serial, that was like just a couple months ago, a serial diluter. So it's very dangerous to have your money sitting in it overnight. So here's the thing though. It's just a penny stock. And if you calculate it for a really wide risk to stop, you probably don't have a lot of money in it. So, you just might be going for a nice big flip or something. And it's a penny stock catalyst swing. But just know that you're choosing something that constantly pushes the dump button. They do that like every couple months. It looks like they're quite serial with dumping. It may also mean that they have open shares ability to sell and dilute shares, not just per an immediate dilution, but at a trade desk at Morgan Stanley, they get to unload share. They want to be diluting the shares into higher prices, and they may be able to do that over the course of 5 months to 2 years, and they have that on the books. And so those trade desks are adding pressure to the demand side. Every day on the supply side, it's adding pressure on the supply side to the against the demand. So you have so many things working against you there on G-Wave. And again, the catalyst itself, if you look at the volume of it and the size of it, is not any different than a recent catalyst it had in May. And just a few weeks after that, I think it might have been 2 weeks after that, they did a 150-to-1 reverse split, which is bullshit. Reverse splits show you that things are not good. And then you have all that dilution on the books as well. So this does not look too good. Thought it was a recommended trade. I keep misunderstanding a day trade from a swing trade. Play stop at 30. It's at 37 cents. Yeah, that's good. But I mean, just think about it. Here's the thing. I need to get you to be able to think. Let me go back and look and see what the context was on the G-Wave, or was it something that I was saying? Was it a call out? There's Mr. M Trades today, actually this morning, said new entry idea G-Wave. So he's talking about, but it literally says day trade idea on his. And then let's see, on the 6th, on the 6th inch re-entry, volume picking up here. So he's swinging it. He had some swing ideas, I think, on that. But it was, a penny stock swing. That's a bit different. And so whether it's a day trade, I got a glitch there, a day trade or a swing trade, either way, it's a penny stock. And then you need to be able to do the quick analysis on it and understand and look at the chart, see if there's been any reverse. I mean, it looks terrible. It's below the 200, but maybe it's bottom reversing. I mean, thing is, you don't want to be doing the mass system on stocks that aren't trending and trending and trending and trending. Like we go to GE, you want good stocks. They're always going up. What was that other one I was just looking at? Well, that was the market, but Walmart's been going up really good. Good companies, good charts, moving up, moving up, moving up. Now, I was interested in what you had done here by getting into G-Wave, because I thought maybe you were getting in for a bottom reversal, because it kind of did do that. But it doesn't matter, because it's a penny stock and a shitty company who treats their investors poorly and has done reverse splits and has been in a down trend for almost 3 years now, I believe is what I'm reading there. And when you just keep going back before that, they've done so many reverse splits and so much dilution that they've never gone up in the long run. So you need to be able to just look at what you're getting in. You don't want to just blindly take alerts. But good job setting the proper stop on it, a nice wide risk and all that. But the expectation here is that it's dangerous, it's risky on your capital because of how they may be diluting into everyone, and it's in a shitty downtrendy stock. B, it's a penny stock. So if you're going to swing it at all, it's a penny stock. Sometimes that can happen. There can be a major catalyst, or you might believe, I don't know what your thesis is on this, but you might believe in this G-Wave company is hot right now. and maybe over the next 3 weeks, you think it's going to quadruple, so you take a small little bite, or whatever. But it's a different kind of trading, and I do it. I'm not doing it these days. I'm focusing on amassing on trending stocks, but it's not trending. This is a catalyst penny stock strategy. See, this catalyst day, penny stock. And in my opinion, it's a little bit too shitty and dilutey and reverse splitty for even me necessarily. But you can't ignore the fact that, it did something and that maybe it would do something more. So, I wouldn't fault anybody for trying and seeing something there that they maybe want to try. I just think that, there's 15,000 stocks on the stock market. Maybe, a less risky system of finding stocks can be had. I'm not saying you came up with this strategy. Yeah, very discouraging. Yeah, 100%. I would 100% say that's discouraging, because I would say that's discouraging 100% because you completely misread this. And I expect more of you for sure. Like, how is this a trending stock that you think you're going to be able to amass like GE or Walmart? How are you going to amass something if it doesn't keep rolling? And then if you go over to G-Wave, how do you look at this chart and say to yourself, this thing is going to be rolling, up? It's going to be going, it's been going down. Okay, maybe I can't see it because it's so down here and diluted, so down low. So I start zooming up and I see, yeah, there's no uptrend going on. Maybe there's a bottom reversal, but you understand, when a reversal like that happens, that's not an uptrend necessarily. And even if it's 4 points to an uptrend off of a shitty downtrend for 11 years, why be interested in it? You want to find, come on, this is Walmart. We know what that is. That's a store. I don't have any idea what G-Wave does. We look into it. That's something you can do and everything. But, why do we have to go to such corners of the alleys in the ghettos, even Carvana is something that maybe we're all not that familiar with, really. But look at the chart. And we know, though, but we know much better than G-Wave. We know more about Carvana than G-Wave, and we probably honestly haven't researched it at all compared to G-Wave. So we're actually in the same state of knowledge between G-Wave and Carvana, and yet we can see on the Carvana chart it's just been uptrending, and on G-Wave it has not. And then in Carvana also, we kind of heard of it. People have talked about it. Maybe we've seen the little car vending machines. We know a little bit about it. It's out there. It's doing some big business, and we have a sense for it. G-Wave, I have no idea. So you see what I mean? But mostly we're trying to pick growth stocks on companies that are trending and moving up and up and up, because they're going to provide, the market's about to open in 20 seconds, but they're going to provide those multiple amassing entries as it continues to ratchet up and up and up. It's going to have all those opportunities for ads. And this is when it finally did its bottom reversal. This was like the beginning. All right, market's going to open in like 3 seconds. I don't even know if it's going to come through the system here. Yeah, there we go. Yeah, but it's good, It's good you talked about it. It's good to get it understood as soon as possible, right? Where am I getting? I'm getting messages or... Oh, okay. All right. All right, so market's open. And let's see what happens with the market at the open here. But I wouldn't I wouldn't discourage yourself thinking, I can't see what Evan sees. That's not the situation. What you have to be discouraged by is, I didn't understand some things. and I can conquer that, you know, because it would be too discouraging to think, you know, I can't see what Evan sees, and I'll never see what Evan sees, you know, and that's not going to work for you, and that's not the case. What you have to worry about is that you still have a lot to learn, and it just takes talking about it, and then you'll have learned it. That's all. You're just missing understanding. There's 1,000,001 strategies and systems out there, you know? So you need to learn what makes each one work for it. Every system starts with stock selection. So if you're talking about a mass system, we're not looking at penny stock catalysts, although you can use the amass technique to swing trade or even day trade anything. But ideally, the amass system coupled with growth stocking, finding growth stocks that are in great business growth portions of their business cycles and their business, and have been trending up and up and up and up, or it looks like that would be the expectation. That's the most smoothest way to use the amass technique. You can use it in day trading, you can use it in penny stock catalyst trading, but now if you were going to go after a penny stock, you know, you'd be trying to cling on to a catalyst. But that's penny stocking, you see. So the stock selection has criteria, or world, the universe of stocks that you're looking for at needs to be coupled with the system. And the amass system is best coupled with trending growth stocks on mid caps and up. There may be a few small cap exceptions, and when I say small caps, a lot of those are penny stocks, and that's why there's that differentiation. But because we're talking about companies that, you know, are worth $2 billion or more, but there's no hard line about it. It's, you know, because GoPro, for example, I think is worth like $300 million, but that's a solid company. We know they create products. All it could take is one innovative product, and they could be worth 10 times as much and be going into a growth cycle for the next 4 years. You know what I mean? So there's exceptions. You have to know how to think, because GoPro is probably worth $1. It would look like a penny stock to your eyes. You have to know how to differentiate shit from something maybe good, and then good stuff. Now, good stuff goes down too. But you do need to know how to differentiate between shit, maybe, and good. It doesn't mean shit's going to go down and good's going to go up. But you need to have the skill to be able to differentiate between shit, maybe, and good stocks, companies. That's an important, like, stock selection skill that you want to have. Because you need to be able to have that. So you can at least say, okay, look, I mean, maybe some people want to trade shit. Not you, I know, but I'm just saying some people maybe want to trade shit. They like, you know, wild blips and shit. And they take swings and scalps and day trades on wild, crazy shit. And sometimes those things go up 20x on them over the course of 2 months. And that's why they put a little bit of money into it or whatever. And that makes them happy. But that's a very volatile, you know, strategy, in my opinion. I teach you how to control that better. Not you, Randy, but people. You know, like if you want to trade penny, you want to do penny stocking, how to kind of make sure that the company is not going to crap on you. and that maybe there is something good going on, and then maybe the chart looks okay, and then there's stuff you can do with it. So, and then when you're looking at great companies, like I could choose like Boeing. I mean, Boeing's a company that I don't have to worry about, but like as far as it being a penny stock, shit stock or anything, but it's in a downtrend. But at least in my growth stock selection universe, Boeing is one of the stocks that's on the list of things that I would screen for, and then it doesn't make the final list of things that I like things that are in an uptrend and stuff. But Boeing's on the good company list because it's real, and you know what I'm saying. So there's shitty stocks and strategies that can couple with shitty stocks, and you can trade them, and then there's strategies that can work down there. And then there's good companies, not shitty, good companies that you shouldn't be doing anything with. So the whole shitty, maybe good, skill is 100% important, but it doesn't mean anything's going to work. The next set, at least for in the Amass system, is it a growth stock, which maybe you need to understand requires growth, like it's usually a younger company that hasn't hit full saturation on the global market, and so it has room to grow and expand and increase its demand for its services and its products. So it's going to grow, and if that isn't showing up in the charts yet, maybe it's looking like it's teeing up. But most of the time, you do see that in the charts. Walmart is in a growth cycle. I mean, that's interesting, because it's Walmart. It's just a store. But it's in a growth cycle for whatever reason. It's not because retail's going to pick up. It's they're doing something. Maybe they're getting more Amazon-like or something. I don't know. I don't even look into it, but I don't need to. I can see the chart is moving up and up and up and up. So, and price has been up above the 200, and it's been trending and undulating in beautiful straight up waves. And it's one of the lower performers. The distance from, say, this bottoming out breakout here to prices now is it's kind of a lot for Walmart. It's 71%. That's pretty impressive. That's in 1 year. That's a 1 year. It's exactly 1 year ago now. 71% in 1 year. For Walmart, that's pretty impressive. But I'm not saying you have to pick a Walmart or some big ass company. I mean, I have Lemonade, which is a little bit different. Like, look at this one. I have an Amass thing going on Lemonade. This is an insurance company. It's like online insurance company, like Geico or something. I mean, Geico. And it's not in a beautiful long uptrend. But what did I do? I first said to myself, okay, this is a good company. It's between maybe and good. Secondly, I can see that the move that it's been making has been successive. Okay, so there may be some reliability to something's new going on there, and it's entering a phase of growth. So I'm getting in early, and I know that. This isn't Walmart. This is Lemonade. It's not Walmart. It's Lemonade. But I can see that it's bottom reversed out of this area that it's been in for like 2 years, and that's important. So I got in, and I'm looking to see if maybe I can amass a position and be holding for the next 2 years as it continues to walk its way back up to higher prices. But it's not as beautiful of an uptrend and reliable of an uptrend as Walmart. Walmart's been going and going and going, and it's just been going. It's like very easily tradable. But Lemonade, a little more risky, a little bit closer to like the G-Wave chart where, spiked and a little bit of pullback, spike, pullback, spike. But I mean, I'm seeing a lot better continuation on the technical analysis side from Lemonade. But Lemonade is not G-Wave. Lemonade is better than G-Wave, this company, as far as I know. And if you go to G-Wave, you can see it hasn't really shown itself yet. Second wave. Like, are things totally changing? Is it new management? If it's a new company, I can disregard the past. Like if the company's now been refreshed, it went bankrupt, and now it's been relaunched, and there's a new CEO, and they have new policies, and they're not going to be diluting, I could see why maybe I would want to watch it. But I would want to see it kind of prove itself at first. But maybe I start with a little starter. But anyway, G-Wave has the problem of it's diluting. Lemonade is not diluting. If I go over to Lemonade over here, and you see the little blue chart down here, probably, because it's a big company, why would it do that to its investors? Probably it's not diluting. So I'm zooming out, and I can see that, yeah, they don't dilute. They have little 0%, 1%. They're not diluting into their investors. They don't do that. So even Lemonade, this sort of kind of distant corner of the market company, but yet a real insurance company, has a chart that's not been reliably trending for a long time. So I'm giving it a shot in the dark, when a little bit with Lemonade. But I'm choosing a better shot in the dark. It's like saying, if you could get Apple in a moment like this, where it's coming off of a bottom for 2 years, and it did this, and it looked exactly like this, the technical analysis, it's not super proven, but it's worth a shot. Why? Because it's Apple. This is worth a shot. Why? Because it's Lemonade. G-Wave's not worth a shot. Why? Because it's fucking G-Wave. Do you see what I mean? So it's very important for you to understand. You need to know the different moving parts of what's going on and understand why on earth each of those different moving parts is important. Like when you got into G-Wave, you have to ask yourself, why am I getting in? And you need to line up all the reasons. Like it has to be real. Like, in other words, you need to know why you're getting in. You can't just go, I was alerted, and this is like one of those amass things. It was alerted. This is like one of those amass things. Goes right to what I tell everybody. I've been saying for years is trade with your eyes, not with your ears. Maybe this is not an amass thing. You have to look at it and make that decision for yourself. You need to know, is this an amass thing? You can't just hear that. You need to look at it and decide for yourself, is this an amass thing? So you need to know how to, how amass works. Trading is like NASCAR driving. You kind of need to know about how it all works before you get in, don't you think? And then you heard, G-Wave. Okay, so you pulled it up and you heard amass. So you said, okay, and you saw like a low back there, and it looks like probably that's where it all started. And so like 35 cents looks like a good idea, or 37 cents or whatnot, the low of where it all started, the catalyst day started. Good job there, selecting that. But then you got to say to yourself, what am I doing? How do I even know this company's going anywhere? Why am I getting in? I mean, you got in at a later date, I know that. But, let's assume, it was back here or something. Why am I getting in when I don't know if this is going to continue? There's no trend formed yet. 100% we can say that. There's no trend formed. There's no trend. So you have to say to yourself, don't I want to be getting into things that have trends? What am I doing? Am I doing catalyst trading? Oh shit, is this a penny stock? Oh, I'm doing catalyst penny stock trading. Okay, I need to know what I'm doing. If I'm doing catalyst penny stock trading, then this and this and this and this and this and this and this. Right? But if I'm looking for snowballing, I mean, you should know fundamentally step number one is that things should be trending, or it should be something that could trend, and it needs to be a good company. Why? Because you want it to be able to last maybe 3 months, 6 months, 9 months, 12 months, a year and a half, 2 years, 3 years. Who knows? It's not going to last on a guess. You have to know that's a solid company. even if it's not profitable or weird things are going on or whatever. I mean, Tesla is not easy to trade, but it's Tesla. It's not G-Wave. It's Tesla. And it's going to have its problems, but you already don't have to worry about it being a shitty company. That's out of the way. So you can get to reading technical analysis on it. You can look at the chart and you can find entries and bases and stuff. It's like moved up here, went into this base. Boom, seems to be like an entry there coming out of VCP tightening base. It starts moving, it bases again. Boom, it comes out of a VCP tightening base. That's an add-on. It's rallying. We're taking profits. Maybe it's going to do this again. Then it breaks out. Boom, that's an add-on. Late January. But we are starting with the fact that we know this is a still as yet young company with huge growth prospects, by the way. Like they have the robots. They haven't even started selling their robots yet. To say nothing of the cars, and to say nothing of that it could become a taxi, an unmanned taxi service, and that they have so much growth prospect. Now they're getting, maybe Elon Musk is going to merge X with Tesla, or maybe it'll be a separate company or whatever, but that has AI, and Tesla uses AI as well. So it's like, you know what I'm saying? So it's a good company. It's got growth prospects. Based on the growth prospects, you're either looking for it to start to uptrend or get on a trend that's already been uptrending for a long time. See, like Tesla's just starting to uptrend. Walmart's been on an uptrend for a long time. There's all kinds of varying degrees of situations you're getting yourself into, and you should know for each one kind of like what you're getting into. Like if I get into Tesla, I don't have the same hopes and expectations as if I get into the Walmart trend here. I know though that Tesla has a history of doing amazing gains and having amazing returns, but it comes with a lot more wild of a ride. And it's only just started. But the real point here is that it's only just begun. So it's not for certain that now we're entering this, big 2-year growth cycle on Tesla. Whatever it is, But over here, so now I know, but over here, I'm getting in something that only goes up a little bit because it's Walmart. It doesn't go up crazy. So every time I add on, I'm building up a position. But I mean, even if I had all my money in Walmart, 100% balls to the wall in the last year, it would only have gone up 71% entirely. We're trying to seek bigger gains than that. And 71% would be wonderful. I know everyone will be happy with that. But do you see what I mean? It's like Walmart is much slower. So, but do I know what I'm getting into in that situation? Yeah. Do I mind having a much more solid, slower, maybe more reliable trending stock in my portfolio of amassed stocks? Fuck yeah. Do I like to mix it up? Absolutely. But I mean, between Walmart and Tesla, I think I'm getting in good stuff here. So whether either one of them fails out, I don't have any coarse feelings. But I know what I'm getting into. Both of those are very different situations. Tesla versus Walmart, but they're both potentially trending. The problem is that Tesla is maybe just beginning its trend. Walmart has been in a trend. I don't mind getting into either one because Walmart's been in a trend for a long time, quite proven. So maybe it can go more. Okay, let's make some money. Tesla is Tesla. And it's just started trending and breaking out of a sideways area, and it's just, a month ago, just started trending. Does that mean it's in a confirmed uptrend for the last year and a half? No, it's for a month. It's been in an uptrend. But maybe I want to try to get in early because who knows? But do I know that? Yes, I know that. I know that that's what I'm getting myself into, that's what I'm doing. that I'm doing that on Tesla, and that that's the situation and that's what's going on, and that that's not the same situation on Walmart. But both can be approached with a mass. Both can be considered growth stocks. One's at the potentially maybe the beginning of a new growth cycle, that's Tesla, and the other one's been growing amazingly for like the last year and a half, that's Walmart, you see. But it all started with they're good companies and they're trending. But so what I need you to do, Randy, is I need you to know what you're doing. You know? And it doesn't work if you don't know what. Are you still out there listening? It doesn't work if you don't know what's going on. Yeah, I see what you wrote. Are you still out there? Did you have to go make some breakfast? Maybe he's not even there. Hopefully you roll this back and listen. All right. I'm going to take a look at some things. The market's just been going kind of sideways. So, we've had the moment to be able to talk. Oh, yeah, you're listening. Okay. What do you think about that, Randy? I mean, the reason I'm here and I run my group is to be a mentor. And so that's definitely what you have. You're fortunate, that it could have been anybody. I recommend anybody get with any mentor that's been around for more than 10 years. Do not get with a mentor that's been around for less. But in any event, you're lucky to have a mentor. It's a great situation you're in. Use it, to your advantage. Continue the whole feedbacking communication process so that, you can continue to get mentorship cycle in your learning cycle. You can get the mentorship. So it's like, what is it? It's building through mentorship. But you're not gonna have everything right on your own understanding right away, and some things may need to be re-taught or retold or re-educated or re-communicated by your mentor because they notice you're not understanding something you thought you understood the right way. And that's wonderful. That's wonderful for you to have, to have somebody who can point out, who can see what you don't understand that you thought you understood, because you can get yourself into trouble thinking you understand something that turns out you didn't understand. And believe me when I tell you this, well, even I'll tell you this, even after 26 years of stock market experience, there's still a lot of things that I don't understand. And the bleeding edge of what I do understand could potentially be things that I don't understand. So I may think I understand things too that I don't understand. I may think I understand things that I don't understand. And I can tell you that in the beginning, of course, of those 26 years, there was probably a good 8 to 14 year runway there of not understanding what I thought I understood. And it just was unfortunately before the internet. And so like trying to correct that or figure that out was a very long process. Thank God we can do that a lot faster nowadays. But I guess what I wanted to say is that not everything you understand, you have to worry about not actually understanding it. You do understand some things. So you can't just go, oh, geez, maybe I don't know anything. No, you you're progressing. Just there's always something to learn, Randy. There's always something new to learn, to either soften up what you thought you understood or harden up what you understood, to support it, to like juxtapose it, to challenge it, and to keep you on your toes, to question it. There may be some things you learn that question what you thought you knew, and there may be some things you learn that support what you thought you knew. And that's going to be a never-ending thing that goes on. Because imagine this. Imagine I learn about something very advanced, maybe about the economy. I don't know what it is, right? Because I don't know what it is. But let's call it this economic factor. Maybe global warming. Maybe I've never took into account ice ages and warm ages cycles. Something. Okay, I'm just as an example. And the whole reason the stock market's been going up my whole life is because we've been going into a warming cycle. Who knows, right? But I don't know that yet, because all of a sudden the seas seize up because of desalination, because the icebergs melted, and we go into a huge pullback climate-wise, and the world becomes very cold, and the stock market goes into a 17-year bear market pullback. Now I have to question, what did I think I knew? So you're always going to be learning stuff that reinforms everything you know, and that'll never end. So don't be discouraged, and don't be worried about what you know. But continue to be in the embrace of a mentor to help point out things as they can to you. That's all you could ask for. And yeah, you can be concerned as far as, risking capital here and there, this or that. But, the thing is, like what I just showed you with Walmart and Tesla, it also applies to the PCS, to put credit spreads. Now, over on Walmart, I don't think you'll be able to get a 21% return or better. But on Tesla, you certainly could. But you could understand why. You can understand why. And you could understand the risks. You could say, I want to get a PCS on Tesla. And that could be a good idea. But you should know why. You should know, because it's coming out of a flat, a region where it wasn't growing, and now maybe it's growing. And the reason why I get put credit spreads is because if price goes sideways or up, I'm banking. And in fact, even if it slightly goes down, not too aggressively, but just has a natural pullback, I'm breaking even, and it's not too much skin off my back to give it a try. But you have to say to yourself, okay, but I'm doing that on something here that I don't even know if it's really in an uptrend that's going to continue. We don't know that about Tesla yet. It really is very unconfirmed. But over on Walmart, we do know that. But see, so you have to just know. You need to be able to know what you're doing, what you're getting into, what the situation is. Now, that's Tesla. There might be some other thing. I don't know. ET was flying. But that's not a huge reliable stock. I don't know, Microsoft. Apple. Apple's been flying lately. AAPL. Well, it's Apple. But, it has only just begun to break out of a particular base that it was in. And it did that, a while back too. Back here, it had a long, almost year-long base. And then recently it had a long, almost a half a year base. And it's really only rallied, recently. There's no for sure that Apple's in an uptrend, but it kind of is. I mean, you look at it over the 200 moving average, you look at it over the years, so it should be good for a PCS. Only go look at the PCS and you might find that it doesn't really pay, might not give you the 21%. And why is that? Because it's a bit more reliable. A lot of the, stuff that works in PCS comes out of some degree of uncertainty. because people want to take bets that are ridiculous, and then you give it to them. Well, they're not going to take ridiculous bets on Apple as much. That pressure is not going to be there on the premiums and the pricing system so that occurs. But over on Tesla, oh man, I mean, there are people that think their cars are dumb. I mean, there's so many people willing to bet against Tesla. I mean, they're stupid, but what can you do? But so that's Tesla, and so that creates the premiums. But what I'm saying is that even if you get a PCS on a growth stock that's in an uptrend, and you by the way should be applying a very similar process to those PCSs, which is finding good companies that are in an uptrend or are just starting an uptrend, but if they're a good company and you want to give it a shot. I forget what I was trying to say there. But yeah, those are the ones you have to be able to, even in PCSing, find good. It's not just about the charts. Although for me, it's about 90% about the charts. But the reason why the charts are good are because also usually underlying growth is good. The fundamentals, I mean to say. The fundamentals show growth. Growth in the demand, in the sales, in the revenue. I couldn't remember the word revenue. I was thinking of something else. I wanted to read what you said. You're listening. What can be said? I hear you. No reason to re-explain your admonishments. Well, I don't want them to be admonishments. What is an admonishment? Isn't that like a punishment? What's an admonishment? Admonish? I don't want it to be a punishment. A firm warning or a reprimand. Yeah. No. It may feel like that. Well, this is supposed to be definitely 100% a learning conversation. I'm trying to teach you something here. There's a base level of information that's being communicated over the last 30 minutes here to you and those who are listening about how to think about the stock selection, the strategy you're coupling it with, whether the trend is kind of new or whether it's more reliable because it's more enduring and time tested, whether it's a shitty stock, a good stock. There's just so many different ways to know what you're getting into, and then coupling that with the right system. And there's that, because you can amass on shit stock, penny stocking, swing system. You can amass. Well, we found out you can't amass with PCSs, but you can amass with a lot of systems, and you can amass with the way we do it with nice reliable stocks. Reliable is not the best way to put it, but because you can never be sure. But you could use amass on Bank of America. What is that, BOA? No, maybe it is though, and it just pulled up the wrong ticker symbol here for something in India. BAC, Bank of America Corporation. You could do an amass on Bank of America, but Bank of America is a very slow-moving stock. But it could still be done. Amass can work even in investing. And it can work in position trading, which is when you're holding something for months, which turn into more than a year. I would still call it months, even if it's like I've been in it for 23 months. It's sort of like after you have a baby, everyone's like, how old is it? It's 17 months old. Okay, how old is it? Okay. No, but we talk in months probably when it comes to positions. And then swing trading, which is position trading too in a sense, but you're expecting more like 1 day to 10, 20, 30 days, although swing trading can be position trading the same. So you can swing trade a position for years. I mean, it's possible. But my point here is this on Bank of America is you could even amass on Bank of America, but the problem is it's a bank, and like on that recent breakout here, bottom reversal, maybe you now up 24% in half a year, more than half a year. That's not a lot. So even if you snowballed all your money into a massive position on Bank of America, your returns would be nicely tucked into a solid company like Bank of America, but would be subject to the fact that they're slower and not quite as amazing, and probably do not beat the market itself, which is the average of a lot of stocks that do a lot better than Bank of America. But it's a bank, so your money is maybe a little bit safer. Just maybe you don't know that, but these big, huge bank stocks, tend not to do too poorly over time, but they do go back and forth and have a lot of variance. But what was I saying? My point is the Amass system works for that too. So Amass works for day trading, it works for swing trading, it works for position trading, and it even works for investing. It works so much so far everywhere with snowballing, the way the techniques of adding on and all that and raising stops. It works everywhere. However, you might not want to particularly use it. It depends on what you're trying to achieve. So we go after growth stocks that are in trending cycles. And the reason why, Bank of America could be trending. So you might say to yourself, so I'll go after stocks that look like they've been in an uptrend for a long time. Like Walmart was a good example, but even a bad example. But like Bank of America, let's say the chart was looking like this. It's been in an uptrend, it's been in an uptrend, an uptrend, an uptrend. And it's very reliable, right? It's uptrend. Man, I want to get on that and amass a position. You're going to get yourself an amassed position. But your returns are not even going to beat the market. So that's why even something that's in an uptrend may not be the stock selection criteria you want matching up with what you're doing with it, which is with like Amass. There's a lot of different ways, or PCS, whatever. So you kind of got to know what you want. We want stocks that perform better than Bank of America that go in uptrends. Well, a bank's not going to do it. A bank is not going to be the companies that do it. And Walmart really isn't going to do it either. But it just happens to be doing it lately. So that's why I'm in it. But, mostly because it's nice and smooth and reliable. And I think I can manage the trade well. Just it's nice and smooth. So I have my reasons for getting into Walmart. But something like, I don't know, let's see. I'm just trying to pull out something else. I'm in SoFi, for example. SoFi is kind of bank related. And if you look at it, it's not in a long, reliable uptrend like Walmart. It's just at the beginning of it. But I know what I'm getting into. I'm getting into the beginning of maybe an uptrend. Why is it the beginning of maybe an uptrend? Because it's been down here for like 2 years or 3 years. And that's usually the sign of what we call stage 1, which is where a company just sits for a long time. And it's breaking out of that. It just broke out of that. And that's interesting. It's worth a shot. And how do I know that it can do better than Bank of America if it's a finance kind of stock? Because it has been known. SoFi has been known in the past to make really strong runs. It just made this run like back here before that. You could have known that, to 24 from 16, which is, I don't know, it's like an 80% run in just like 3 months. And even right now, after a 1050 entry, it's now at 16, which is like 50% gains in a month or two. So I know it's moving faster than Bank of America, you see. So I know what I'm getting into. I'm getting into something that might do impressively well at the beginning of its birth, coming out of the stage 1 canal and being born into the growth cycle. Just slipped right out of there. And so I want to try and see if I can amass a position in SoFi. And it also helps me to know that. Why? Because maybe I want to be more forgiving in the beginning stage here. I want to keep my stops wide and let it have its floundering moments, because so long as it's up out of that stage 1, I might be accumulating something here that could be tripled or quadrupled or 5x or 10x in a year. It's going into this growth cycle. It's very interesting. And so far, and I think it's, as far as I know, I really don't research these companies heavily, but I can, but I just don't. So, but as far as I know or have heard, SoFi is some kind of bank/wallet, online wallet type of thing, where also you can hold and trade crypto, I believe. But I could be wrong on that, but I believe it is also crypto market related, just like PayPal and a lot of other companies who are tied into crypto somewhat, and yet are finance companies or bank type companies. If Bank of America said, oh, we're going to release a crypto wallet, their stock would probably triple in 3 months. But they don't. They're just a solid bank. They don't want to they don't want to put 5 to 10 to 15% of everything that they are into something that has a volatility range of 90%. It can go up here and then it can be down 90% in a year. They don't want that. They want, in fact, banks, what do they want? They want to make loans and have tied up collateral, and everything's nice and secure. So that would never happen on Bank of America. So that's what makes SoFi something interesting, even on a little verified trend, breaking out of a stage 1, and Tesla, same kind of thing, versus the slower stocks. And I'm just barely in Walmart. I mean, it's 71%, year to date or whatever, 1 year's performance. So anyway, hopefully you understand that now, that there's a difference between all these things, and that you have to sort of know why you're getting in, what you're getting into, so you can kind of like understand the expectations when it starts happening and know what to do with it. So now we're getting strong pullback. Somebody must have made some comments. We're getting strong pullback on the market. What time is it? All right. We are 45 minutes after the open of the market. And I don't know. This might be a war thing that just happened. IDF says destroyed over 90% of Syria's surface-to-air missiles. That's a report. I don't know. But the market is pulling back kind of at this very second. I'm trying to read why that might be. If there was like a report that came out. But, it can be just smart money unloading into strength here and reading the signs on the wall. I talked about the market for the first 20 minutes of the pre-market portion of this. You could scroll back and listen to that. For any listeners right now who want to do that, you can go back and listen to what I said about the prospects over the next couple of weeks here and what to expect and think. I'm not really seeing anybody saying anything over on X, where you can get a pretty good update. But yeah, I mean, this is it's been struggling. Look, you remember in pre-market I said we need to see it follow through, and it didn't even really do it. It never did break. It closed here. It never really did break above that point. It never created that uptrend, and it never did it again, and it never did it during the open, and it's been futzing around. Market makers have been accumulating shares with the back and forth action, and now what I said could happen happened. It broke down there. So now we have 4 points to a downtrend, really just happened. Looks like this. 1, 2, 3, 4. So now we do have a confirmed 4-point downtrend off of the PPI or jobless claims or jobless claims news. So that's useful. We know it's probably going to be a red day today. And I kind of said that in pre-market about what that possibility could look like. That we might pull back for just a couple days, and on Tuesday bottom, Wednesday doji, and then Thursday Fed report. Maybe we start booting up a Santa Claus rally, or it starts a little rocky. Then the next day it buys in, and then all of a sudden the prophecy is confirmed. The Santa Claus rally starts on the 20th, as it typically, on average, always does. Santa Claus rally from the 20th to the 6th of November. Sorry, January. Where did I get November from? January. Okay, guys, that's the morning show. Wait a minute. You had a question there. How you approach a situation as opposed to how much you think you know. So it's how you approach a situation as opposed to how much you think you know. And would love for you to elaborate on that again. I'm just going to stick around for just a minute more. I'd like to see you rephrase that a little bit, because you're philosophically noticing something deep, and I'd like to kind of put a button on it better. I'm like sort of not fully understanding, but you're noticing something heavy. And if you could just say it again in a different way, I'd like to read that so I can kind of get the full-on gist of what you're saying there and tell you, yeah, I agree with you. I pretty much probably do. You're noticing something, but let me see if I can understand that better. I'm going to stick around for just another minute or two and wait for you to type that up in a different way. Let me see what you say there. Well, I look at Pharaoh, which is one of my better movers today, but everything's going to be sort of sucked back into the drain of the way the market's moving today, from now on. So from the point in which it broke that trend, it's like suddenly confirmed, oh yeah, we're in a downtrend. Now that can bottom today, and then it can even reverse, and then it can even make a new high. I mean, anything can happen, but it doesn't matter. We are in a confirmed 4-point downtrend over the last hour. Not on the daily chart, not overall, just for the last hour. So, that's useful information for how you want to think about things. So you pull up a chart and you're like, ooh, this looks good. You don't want to get in it, because now we are confirmed in a downtrend for the last hour. So why would you get into something that's probably going to backpedal and maybe by the end of the day not even turn out to be an entry day? So don't enter, you know what I'm saying? So I'm not saying anything too big, like, oh, we're downtrending on the market. We're now in a bear market, for the next year. No, I'm just saying in the last hour, and about 5 minutes ago, we confirmed that from the last hour, we're downtrending for the last hour. These little things just help you make better decisions. I say something, don't bet the farm on it and go, because of whatever. It's just knowledge. It's just observation. It's just understanding what's going on. Well, I guess we didn't get a further explanation on that. He must have left. Yeah, I think he's in Europe. So he might have left. But he said, so it's how you approach a situation as opposed to how much you think you know. Yeah, I think you're saying that based on what I was saying, which is that even I don't know everything I need to know. And there's stuff that I think I know and understand that I even will find out at some point that I don't. And so you said that, I believe it was in connection and context to me saying that. And you said, so it's how you approach a situation that's more important. Yeah. Kind of like you have to have an expectation figured out. You have to understand what situation you're getting into, and so therefore that creates for you an expectation. Open-minded. Well, being open-minded, yeah, it's how you approach a situation. Well, for sure, you always want to be humble in the market, because as they say, the market, what do they say, can remain, what is the word they use? I want us to just, say confusing longer than you can remain solvent. But what do they say? The market can remain perplexing longer than you can remain solvent. Let me see. The market can remain irrational. That's what they said. The market can remain irrational longer than you can remain solvent. So you never want to, think you've got it all figured out. You should, always be. You're playing with fire. You're a volcano lava scientist. And a once in a million year thing that scientists didn't figure out, you should be aware could happen. And going over and playing and collecting melted gold out of lava in the volcano, you should be aware is dangerous. And no matter how much you think you know, you should be aware that you're making a choice to go into that volcano and to play with lava, right? And that you may not know everything. Now, a person who thinks they know everything, they're going to get their ass handed to them, right? Yeah. So the market can remain irrational longer than you can remain solvent. So yeah, you stay humble. Stay humble. Be careful. Stay humble. Now the market, by the way, is reversing back up off of that low that it made. And this is known as, what is this called? This is a very interesting liquidity grab pattern called, it's probably going to break and move up now. 2.5 years ago, we were specializing in this particular liquidity grab move on the market when doing futures trading. Don't play with lava. Yeah. Damn, it's a kind of a power play move. I can't remember. It is an ICT concept. Very interesting, where this is probably signaling that we're going to come up and over that high that we did make it over before. Now that it's flushed out, grabbed all those shares liquidity-wise, and now it's going to move back up over here and maybe even further and sell way up here. So it is a kind of megaphone pattern, but I forget what it's called. But in the short term, right now, this is a very fast right side reclaim is one way you could look at it. We're getting a very fast right side reclaim of that dip, and I would call this tennis ball action. This is a good sign, you guys, all of a sudden coming on the market. All right, I got to go. Errands to run, stuff to do. I'll see you back in the group. Thank you very much for tuning in. We got class tonight. Long was a good move. Oh, okay. Oh, IonQ. I'm in IonQ. Why? What happened there? Are you shorting it and it's gone bad? What are you trying to say? Oh, okay. Yeah, I'm in IonQ, and IonQ is improving. That's good. Nice thing about IonQ for me is it's a tripled position. It's a 3E, meaning 3 entry amassed position for me, IonQ. And here's one, Randy, which is not in a long Walmart-like uptrend. It's just something I've been amassing since this sort of catalyst day, and I'm applying almost a penny stock like catalyst-y type of thing to it. I'm mixing ideas here. So I was able to get into IonQ because it's a relatively very new stock, but probably they're not diluting it to people, and they do have earnings and a lot of good things going on there on IonQ. Anyway, I'm already tripled up on it, so that's awesome. Where's my entries? Let's see if it can show up. There we go. Oh, look at that. Yesterday, I nearly got stopped out. It literally reversed right at my stop. Remarkable. I'm even going to see, did I get hit in after hours? I don't think I did. Oh, I think I did. The position size looks kind of small. Let me see. Maybe I did get hit on IonQ. Let me see. It's pulling it up. It takes a moment to fetch it sometimes. Come on. 10 working. Oh, trade history. It's not coming up. Literally, has to fetch it through the API backend from Schwab. When you pull it up like that in Thinkorswim trade history, it It's like, there it is. Okay, got it. So, actually, what? Okay, no, I haven't sold anything since I added on back up here. I have profit target set, but ever since I added on anyway, it pulled back. So I never did get any of those profit targets hit. But I'm still in, and I have my stop where it is, and it's a tripled up position. And if I do get stopped out, I do get stopped out, knock on wood. But maybe this is a bottom and it's reversing back up and out, and who knows, maybe we'll be seeing new highs soon, and that'd be great. And then I can finally be taking partial profits on something I'm tripled up in. But it's not one of my larger positions, and the reason why that is because the volatility is very high. So that automatically sizes it down, because your risk unit is usually an absolute cash number. For me, it's $100 for my 1R. And so to not lose $100 on this, the move that it could make down is 40%. So obviously you can't risk a lot if your exit is at minus 40%. Like if $100 loss is at minus 40% from how much you put in, then you're only getting it in for $250. Does that make sense mathematically? Hopefully you had your coffee. All right, so but that happens, and and that's why over on Walmart, that's a huge position, and I only have one buy-in at the moment, by the way. But it's a very big, capital in that is much bigger because it's a lot smoother, not so risky. The distance to the stop is from the original entry is 1.4%. So $100 of loss there. I'm able to get a lot more shares. There's a lot of things that work together here. Your R unit, we didn't even talk about that, Randy. The R unit, that's another component of what one must be aware of in order to be healthily trading a system. But there's not an endless amount of things to know. You do know everything. You just have either misunderstood it, or I need to teach it more, or say it again. It's all been said. It's all here. It's all up to the where that person is at with understanding everything, so they can put it together. That's like easy for me now, not because it's so easy for me. It's because of all the years' experience. It's so easy to say, oh, this is this and not this, because I've seen this do this and it's not that. It just takes experience. Wisdom is knowing what not to do. That's what I always say. Okay, guys. Talk to you later. Bye-bye now.